The following is a presentation of TFNN.
Good morning, folks. Well, you got half of the Money Masters out here. Tom had something that he absolutely has to take care of today. And so you've got me for the next hour. Our call number is 877-927-6648. Would absolutely love to hear from you. You know, impatience, folks. Do you think you maybe have some impatience? Or do you know people in your life that are maybe a little bit impatient? Well, in time is so valuable, and I really do appreciate the time that you're investing here with me or with TFNN. We really value it. You can always watch this show on Tiger TV. You can go to the TFNN homepage, click on Tiger TV. Better yet, over on the right-hand side, you can bookmark the link so that we're just one button away on your iPad, your iPhone, your Google device, any device other than a RIM device, I suppose. And that way, one button away, you'll be able to see our charts live. You can always catch the archive of this show on Channel 10. Now, you talk about impatience. Here's one way to consider what may be the shortest period of time. Think about it like this, because I've often heard it said, the shortest period of time is when the light turns green and where you hear that first honk. Have you ever heard that, folks? Has that ever happened to you? That's a pretty short period of time. But I'll bet you there's somebody in the audience here that says, no, Steve. The shortest period of time was this morning when the market went from green to red. Again, our call number is 877-927-6648. That is, it's called a horn-a-second or so. Huh? That's it. So that got the Dow down 41 points, S&P's off 5, Composite off 17, even small caps off 5.5 points, leading the charge on the way down 0.7%. You've got, let's see, Apple down $10. Ooh, let's go take a look at who is taking a bite out of Apple. If they're starting to get some volume there. There has not been the volume in Apple, but now that it's below some of these areas here, let's go take a look at swing point areas. Let's go take a look at Apple and see what she is doing out there. So you've got, give me a second here to pull this up on the screen. We've been trading for 39 minutes. In 39 minutes, Apple's done 5.8 million shares. Now, that is some juice. Why do I say that? Well, yesterday, all of yesterday, you did 20 million shares. That's 6.5 hours of trading. We've only been trading for 40 minutes. Somebody do the math on that for me. 6 million, that's like about 40 million shares or so. But that's just the quick math in my head. Why do I say 40 million? Well, the swing point that it took out a couple trading sessions ago happened to be April 24th when it did 38 million shares. And then, of course, Apple bounced up after absolutely spectacular earnings and bounced up to a high of $618. And ever since then, that was the last time it saw that was the last time it saw $618 even. And right now, Apple on its way down to the 528 area. Let's go really take a look and pull this back a bit. See where we've got some volume for where Apple's really headed to. Apple is going to be headed to the last time that they had earnings, I believe. You could probably look this up, February 15th, when Apple traded out at $514.26, down to low $496. It did that with 53 million shares. You are already through this volume area. That would set up, as Apple gets down there, that would set up a 1 to 1.272, A to B equals CD. So volume has started to pick up in Apple, and that is at $537 a share. That must be a lot of big money funds deciding to get out of Apple and into Facebook. How about you, folks? Are you going to buy any of those Facebook shares? Apparently, somebody's putting some money off on the sidelines, and maybe that's what they're going to do. Maybe they're going to put it to work in Facebook and try and pump up Facebook, which tonight, I believe, will be setting the target price that, you could maybe buy the stock at. We'll see. I say don't buy it, folks. Don't buy it as an individual investor. Wait to see how it opens and see what happens out there. So that's Apple trading off $9.10 right now. Google up $6. If we take a look around the markets, let's go take a look at our ETFs. Let's see what type of volume we have inside those. Let's put this here on a Let's put all the quadrants up on my screen as soon as I can figure out how to do that. Okay, so in the upper left, you've got the SPYs. That is a 30-minute chart. That is quite a nice little hammer candle down there. Look at all these. Now, these are 10-minute charts out here as well. So there was that big down thrust. I must have blinked, folks, apparently, as I was getting set up for this show and taking care of a couple of other pieces of business. So there was some blinking. There was a large swoosh down. Let me put the SPYs on a 10-minute chart as well, just so that we have all the right time frames that we're looking at. Okay, so look at that hammer candle, of course, right now, 10:20. So, okay, so we're into that session right now. And so far, things are not looking good for those hammers. So those would not be Steve hammer candles at all. Those would be discarded Steve hammer candles. But we'll wait to see how the session. You got 7 minutes before we see how the markets react here. The IWM, though, is the one that is looking the most positive. I would take ownership of the IWM hammer candle right now. And so what is that all about? I'm going to switch back and forth because I'm just trying to dissect these markets, if that's okay with you. But you can always give me a call at 877-927-6648. When I say dissect the markets, I'm first going to go over to the futures contract. We're going to take a look at the Russell 2000 futures contract. Why? Because the Russell 2000 futures contract is the first one to test the October 27th swing point. Important swing point out there. The high on that is 768.40. You're trading inside it right now at 767.50. It's going to be very important to see where that closes today. Now, so now let's go switch over to the Russell 2000 index and see what is going on there. Now you got two weak links out there. Really, you kind of have pretty weak market. But you've got certainly two of the weaker links in the market out there, being the Russell 2000 and the NASDAQ, with Apple leading the charge. So, okay. So we're going to take, and I know there's a lot here on the screen, folks. You've got the yellow is a Tiger Gartley sell, and the blue here is a butterfly sell pattern out there. So I'm just going to go ahead and keep those on my screen so I don't have to redraw them. But what we're looking at here is the October 27th swing point on the index. That high is 768.82. So for you home gamers, I would take your little tool, that is your line tool, and I would draw a line across it because that is the line in the sand, and you want to understand today how the Russell 2000 closes. You close inside October 27th. That sets up the ability to go down to the 739.44 area. You do that, that's going to get you real close into the breakout from December the 19th. That number, again, if I didn't give it out, I'm going to give it out now, is 796.46. You're trading out now at let me make sure I give you the right number. 769.46. Thank you. Just a little bit, gotta work on these glasses. Actually, what we got to do is get these screens a little bit closer to us in here. You got me and David White, squinting and looking, trying to see exactly what the prices are. So 769.46. Write that down on your pad. You're trading out at 769.33 right now. So if you're looking for a rejection, if you were a bull and you haven't put any stops in place, what you want to see is a close above 769.46. If you're a bear, and you're in the TZA, or you're just simply somehow short the Russell in some other fashion, maybe shorting the IWM, you want to see a close inside 769.46 today, as that area has been tested. Let's go switch back to the ETFs. Let's go to the daily ETF on the small caps here, and let's go see what we're looking at. That is the IWM. So the IWM, you can see that number is on October 27th, that high, 76.97, 129 million shares. Now, let's see if Stevie can do the math here. We've been trading for 45 minutes. You've done 15 million shares. That would put you at about 115 million or so. Somebody check that out. See if I did any good. Probably not. So you got volume coming into that swing point area. Of course, we know there's more volume. Typically, more volume in the first 30 minutes and then in the last 10 minutes of the trading session. And I'll show you what I mean by that. We can go take a look at the diamonds yesterday. So you got the bulk of the volume in the first 30 minutes, and then you've got some pretty good volume towards the end of the trading session. So your target here on the IWM, if you don't have or you don't follow the actual index or you don't follow the futures contract, what you're looking for on the IWM, your price point is 76.92. Let me make sure that's right. 76.97. 76.97, 129 million shares. You're trading out right now at 77.06. Now, what the IWM also did was completed a 1-to-1 A to B equals CD down. That price projection, 76.45, traded down this morning to 76.37. So, real important here from a market perspective because you've completed an AB equals CD pattern on the small caps. You're testing October 27th, which we know is a high volume swing point area. And, and the market has been moving down, so the market is overdue for a little bit of a bounce. Very overdue. And it will be a little bit of a bounce. If you start to see a bounce taking place and taking shape today, that bounce will last till next Tuesday. How do you like that for being some certain, folks? And so that's what we'll be looking for, and that would give you the ability to, if you were long and you didn't have stops in place and you rode this down here, folks. There's nothing like if you're not short. The next best thing is being in cash when a market is going down. You don't want to be inside the market wishing that you were out. That's a quote by who? Jesse Livermore, I believe. And so, you don't want to be in something like that. So you got really one pattern completion right now, that A to B equals CD down inside the small caps. And what we can also look at, I'm going to get rid of this line going across the March 6th area, because the real swing point that you took on was April 10th. The swing point in the small caps at 101 million shares, and you have gotten through that area on lighter volume. So you've made an A to B equals C to D. You do not have conviction on that A to B equals CD, and you are now, what's stopping into place is October 27th. But just like you can drift higher on light volume, folks, you can also drift lower. That's why these numbers that I give you, you want to be able to understand on the close where things close, because inside the IWM, you close inside 76.97, and game is on for 72.65. And what we do know, certainly what I do know, is that if you are managing your long-term funds, folks, I mean your 401k funds, your retirement funds, you do not need to ride this market down. The New York Stock Exchange has given us the signal, time to go to cash. Can't be more clear than that, folks. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow off about, where did our screen go? Off about 27 points. S&P's off 2. Composite off 6. Russell down a couple of points. Apple trying to gain some of its earlier losses, now down only $4. Let's go up to New York to our man Phil. Phil, thanks for calling. Thanks for holding.
Thank you for taking my call.
My pleasure. My pleasure. Are you a hockey fan?
Yes, I am.
So what did you think of last night's game?
Well, it was a good game, but I'm a Ranger fan.
Yeah. I'm a Ranger fan. I'm a Ranger fan as well. Well, Tortorelli, took Tampa Bay to the Stanley Cup, so a little bit partial to him. And could be, I'd like to see a Ranger Los Angeles Kings final. How about you?
Yeah, that'd be neat. It'd be one on the East Coast, one on the West Coast.
Yeah, and you need to be talking about two big cities, too. So that would, not the New Jersey, and I'm not saying anything about that, or Phoenix. Phoenix, though, is down 2-0, and they're traveling to L.A. tonight, I believe. So it was a good game last night, and I think the next game is Saturday, maybe Saturday afternoon?
Yes, it is, and it's at the Jersey.
Yeah.
At Jersey. Yeah.
So now how much, just out of curiosity, how much are they scalping tickets for those games? Have you heard anything? Is it in the papers or anything up there?
I think that about $80 to up to $160 is, the cheap seats.
Yeah, exactly. So you wanted to take a look at, maybe you can take some of your gold and trade it for a seat.
I have to make it first.
Okay. You wanted to take a look at Gold Corp?
Yes, GG.
Yeah, okay. 52-week high of 56.31, 52-week low of 32.16. Actually got lower than that yesterday. Got down to a low of 32.16. And today trading out at 34.42. So tell me what you're doing and how I can help you.
Well, I own it, and I sold some options on it.
Okay.
And I've been doing that on and off, selling puts, selling calls, covered calls.
Yes.
And I just said I did a spread, put spread on it the other day.
Okay.
For the downside. I bought the 35s and I sold the 32s.
Okay. All right.
What I'm thinking of doing now, because it's been a bounce in it, and I think it's negative for gold right now, from what you're saying, and Tom, and a lot of other people.
Yes.
They're cashing in on these big mutual funds are cashing in their gold.
Well, now, so let me, because you might not have heard my opening, or maybe I did it during the last show. I probably did it during my first hour. So let me back up and just give you my take on gold here. Because what gold did yesterday in the contract was it went down and it was testing the swing point that had just a major move down, which was September 26, when gold went from a high of 1666 to 1535, and you had 359 million shares. The low there, 1535. So yesterday, what the gold contract did was it got down to a low of 1526, but it did it with 159,000 shares, not even anywhere close from a volume standpoint. That was also going into the swing point because the 1535 area was first tested on December 29th when gold was tested with a low of 1523.90. That had 114,000 shares. Right now today, and I gave folks my parameters. Right now today, I was saying if gold closes above 1544.90, and it's at 1570, okay? If it had closed above 1544, then you would have a bullish engulfing, and what you would be looking for is there's a confirmation to be looking for tomorrow, but your bigger confirmation would be getting above that December 29th. That's the most recent swing point, getting above December 29th, which is 1560.280. So you're above it right now. And I got a long way to go in the trading session. But long term, you had the 50-day cross through the 200-day. 2 trading sessions ago, and we know that gold broke a huge long-term uptrend going back to 2008. So my take on it is that we're going to see a bounce in gold, whether it's today or tomorrow. I also think we're going to see a bounce in the markets, but that's not as important as the gold chart is more clear to me. So I think long-term, absolutely, gold is going to seek out lower prices. But in the short term here, this $1,500 area is being rejected. So I just want to make sure, because you might not have heard that take on it this morning.
So you see short term, it will have a bounce, and then it's going to continue back down again. Yeah,
it's in a long term. Right now, gold is, because the dollar, gold's measured in dollars. The dollar index is made an A to B equals C to D, making 100% move. And it may not be today that this all unravels. But do me a favor, Phil, stick with me. That was a short segment. When we come back, we'll go back to Phil. We'll take a look at Gold Corp. We'll take a look at gold. And then we're going out to Nashua to take a look at bonds, and Palm Harbor to take a look at financials. It's a beautiful thing, folks. 877-927-6648. We'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. I am multitasking and not doing it very good. But we are on the line with Phil in New York, and we're looking at Gold Corp. GG is the ticker symbol. So that was my short take on gold with regard to short-term versus long-term. Now I'm switching over to the chart on Gold Corp, and we're looking at the weekly chart just to take a look at what Gold Corp has done so far. And right now it's trading out at 34.28. Yesterday got down to a low of 32.16. Now, what that was doing, Phil, that was going against the swing point out there from February 5th, 2010. That swing point has 57.9 million shares. So far, Gold Corp has traded 20 million shares, and you got 2 days to go. Let me see what was yesterday's volume on this thing. Yesterday was about 7 million shares. So it doesn't look like it's going to have enough volume to push down there, and looks like it is rejecting that area. If that's the case, Gold Corp, just a dead cat bounce of just the last move down would likely be about 39 bucks and change. And that's where I would see it likely just simply bouncing to, which would make sense because that's really getting you into the next the swing point that's up above it. So that's as I take a look at on the weekly chart. If we go take a look at the monthly chart just to see where it's at on the monthly chart, what it's also doing on the monthly chart, Gold Corp doesn't look too bad. Right now what it's doing is testing the October 31st, 2008 area. The high there is 33.85. You're just above it. But there's a lot of time left in the month. We've got another at least 7 or 8 trading sessions maybe left in the month. So but it's coming into the monthly bar with a lot less volume. That bar on October 31st has got 421 million shares. Is that information helping you?
Yes, it does. So you think a good bounce can come in here then?
Yeah, it's possible. The wild card out there, absolutely, and it's not so wild. So maybe I shouldn't use the word wild card. The issue out there is the dollar index and the euro. And so you've really got to really put it all together. So in order for those things to happen, you're going to have to see the euro get a bounce in it, and you're going to have to see the dollar index start to pull back. The dollar index, could easily trade up to 82.04, intraday, or tomorrow, whenever it does, could trade up to 82.04. That'll put some more pressure on gold. Have it pull back. That might certainly put pressure on the markets. Might put some pressure on Gold Corp as well. But at 82.04, it completes a 100% move of a move. Of course, most recently, as the dollar index is making those 100% moves of a move, it's only backed off for a few hours or so. And that's really because it's all about the euro, So they're having, today the pound absolutely has gotten pounded. So that's also putting juice in the U.S. dollar. So you got to take a look at the basket of currencies. The euro right now is coming into a swing point area, going back to January 16th. We'll see where that closes out today. But if there's a run on the banks out there, that's not going to be very helpful to the euro. So we're really at kind of one of these like tipping point areas. Not at the very moment at 10:38 a.m., but within the next couple of days to really release a bunch of information to us. But in your case, just take a look at the Gold Corp chart. I'm looking at it right now just to be able to give you the information. And I think what's very important is take a look at how the gold contract trades over the next 2 days.
Okay.
And so I think you've got to just sit tight now, wait for the market to give you the information, then for you to be able to make your next decision. To me, it's all about patience. You've already got your trade on. You don't want to overreact to anything. I say just let the market give you some information.
Okay, Steve. Thank you very much.
Is that helpful?
Yes, it is. Thank you.
All right. Go Rangers.
Okay, you said it, but okay, go Rangers. Bye-bye.
Okay, you bet. Let's go to Joe in Nashua, just a little bit further away from Phil. Joe, how you doing?
I'm fine. How are you today, Steve?
I'm doing great. Thanks for calling. Thanks for holding.
Oh, thanks for taking my call.
My pleasure.
My question really goes around general with the, like 401ks. You touched on it a few days ago.
Yes.
And obviously getting out of, or if you haven't already, getting out of, NASDAQ, big cap, S&P, small cap, any of those stock type of funds with the markets.
Yeah.
But going from there, you usually are limited. You either have money market, cash, maybe you have a bond fund. In general, my thought was, or question was, what is probably going to happen to bond funds in the short term as the bonds go up? And then, what does that typically do to a bond fund?
Well,
specifically looking at a bond fund, it's a very general question.
Yeah. So it's a great question, because it's really, the question is, okay, where do I park my money? And, right now the strongest asset is actually the dollar. It really is the U.S. dollar. And when I take a look at bonds, they're certainly going through the roof. Right now, the 30-year Treasury bond is trading out at 147.13. It's blasting through a 1 to 2.618, A to B equals CD up. The next level up above that, and you don't see it that often, is pi. What's pi? 3.14. 3.1415 something, 151 or something like that. So let's go see where that price projection is, and I'll put that in on the 30-year because that is where bonds seem to be headed to. And so let's go take a look at that. Now, what you want to do is, obviously your objective here is capital preservation. And that's why I send out that alarm to say, hey, look, there's some signals out there that I can just show you. Switching gears here. So that next target is 149. 149 before you probably see any kind of a meaningful pullback in bonds. But you've got an opportunity to also go to money market. With bonds starting to get so stretched, I'm not sure if that is a real safe haven. In fact, it's not a safe haven. The only real safe haven is cash. Huh?
That was exactly my question. What would in general happen to a bond fund? If the bonds go to 160, would a bond fund potentially go up in value, or would it?
Yes. Absolutely, yeah, it would. Okay. Yeah, it would. You certainly, could take that approach, and certainly bonds. If you go back and you just simply take a look at, what the bond funds have done, or just simply take a look at the Treasury bond, on a monthly chart and go back, it's been going to the moon. It still is. The question is, as you start to get these extensions in there, it's like buying at the highs. Now, I'm not saying that is going to be the high, but, you're better off when you're taking a look at your whole outcome or your objective. Look, you want to be able to, I think your first outcome needs to be capital preservation, always, and your second outcome is to put your money to work where you have the best chance to be able to make money. You'd rather, if you believe in the principle, you want to buy at lows and sell at highs, then the bond fund doesn't meet that criteria. Does that make sense?
It absolutely does. And, that's just for the 401k side. Everything else I have and outside of theirs, and I have my shorts on.
Okay, yeah. So I'm just kind of going back to just the most basic of there's nothing. Sometimes people think there's something wrong to be in cash, or sometimes people feel like you have to be in the market at all times. I say you just simply look for signals. Sometimes you miss those signals, and you miss them. So what? There's going to be another one.
I just don't want to move it from one thing that gets destroyed to another thing that gets destroyed.
King dollar's not going. The king's not getting destroyed. The king is breaking out now. The month is not over. If I put the dollar index back up on my screen and I go to my monthly chart here, the dollar index has been in a bearish pattern. Certainly going back into the 2002 time frame when you had the dollar index up at the 121 area. And if you just take a look at this channel, if you're watching on Tiger TV, if not, you can always catch the archive on Channel 9. And every time the dollar index has tried to break out of this channel, it has been contained. Now, for the last, basically since December of 2011, it's been trying to break through there, and this month here it has absolutely broken through to the upside. Now, don't know if it's a false break to the first of the month's not over. Doesn't look to me like this time it's a false break, but it's still got 7-8 trading days, so anything can happen in these markets. And but it does look like the king dollar is trading the upside. Even if you're wrong, even if I'm wrong, and moving to cash for your long-term funds is the wrong thing to do, you're going to get another signal. You're going to see some big volume come in. You're going to see a follow-through day. You're not going to really miss out on that much upside potential, in my opinion. You know what I mean?
I do. No, I understand. And, I've listened to Tom for 10-plus years, so I definitely remember when the dollar was 120 and he was telling everybody it was going down.
Yeah.
But as I get out, make sure I get out, all these different funds out of the 401ks into the different other options you have. I don't want to put one in, I don't want to go from an S&P index, whatever it is, from Fidelity into some other bond fund and have the exact same result.
Yeah, exactly. And so that's why there's what I do for my clients. I'll be showing folks tomorrow that are attending the online workshop that I do, study of the Dow going back to 1929, and and it just simply using just I'm not going to say simple, but the easiest of all tools, which is just simply the 200-day and 50-day exponential moving averages, because those are relatively easy to plot on any charting system. And when you go back, you have to pay respect, and that's a longer term. To me, this is where you really take a look at the longer term funds that you have. And when you see the crossovers start occurring, that's absolutely telling you, well, if it's a cross through, to the downside, that's telling you to go to cash. It's real simple. You just simply do it. If if it crosses over to the upside, then it can absolutely go long. It's a lagging indicator, And when I take a look at the monthly right now, the month's not over, but the 50-day is at 77.86 on my monthly chart, and 78.37 is the 200-day. So it's just it's just the time to be cautious. It's real simple. It's the time to be cautious.
and bond funds are not cautious.
Well, I'm not saying that bonds might not go up. I mean, the next target of 149, it's absolutely out there. I don't think it's a safe haven that people think that it is.
No, that's more of what that exact. Okay.
Yeah, that
confirmed my suspicion.
Yeah, short term. I think they're going to go up. Now, whether that short term is a day, a week, a couple weeks or what have you, yeah, short term they're going to go up, but it's not the safe haven.
Okay.
All right.
Thank you very much for your time.
Hey, no problem. My pleasure. I appreciate the call. Have a great day. Let's see. I'm not sure if we've got any callers on the line out there. I think we had Mike from Palm Harbor that wanted to talk about the XLF, but had to go take care of something. So since Mike was kind enough to call in, let's go take a look at the XLF. That's nice. It just popped up on the screen here. The XLF going after that October 27th swing point as well. The high out there on that swing point, 14.17. It's trading at 14.16 right now. Now, that swing point, folks, has got 232 million shares. The market, as the market was moving up on lighter volume, it got through there. It did have a breakout session, the XLF did, on March the 13th. But you're well below that area right now. So you've got the XLF having made a 1 to almost 1.618. A to B equals CD down, but the thrust on the C to D leg is still very intense, meaning very strong. And volume-wise today, we've been trading for an hour and about 20 minutes. 46 million shares going against that 232 million shares. So if I were to do my math, the XLF has got some volume in it today. So what you're going to be looking for, I don't know if Mike was looking at it because he wanted to go long or if he's short. So I'll give you both sides of it. Short, you want to see it close inside October 27th, below 14.17, and your preference is to do it with more than 232 million shares. If you do that, then where it wants to go down to is the 1353 area, more specifically probably 1368, which happens to be the low of that October 27th area, and that's on the XLF. If you are bullish, you want to see a rejection, meaning it closes above 1417 at 4 p.m. today, and it does it on less than 232 million shares, meaning maybe more like about 180 million shares or something like that. But anything less than 232, and it creates the potential for a short-term pop. So that's on the XLF. Hopefully that helps Mike out in Palm Harbor. Our lines are open, so 877-927-6648. That's the number to give me a call. You've got the Dow off 45, S&P's off 4. King Dollar. What is King Dollar doing right now? King Dollar is up 10 ticks. Gold up $34. Staging a little rally here. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year. The key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated.
Folks, 877-927-6648. And absolutely stay tuned today. Following this show, you got Kate Stalter. We go all the way out to Santa Fe. There we go. And then we go from Santa Fe up to Larry Pesavento in Tucson, Arizona. And then, as we do on Thursdays, we go out to California to Ken Shreve back here for the Tom O'Brien Show from 4 to 6. Dow off 29, S&P off 3. Folks, you want to understand the A to B equals CD pattern, and you want me to show you a trade that's out there? I've got the 10-minute ES Mini chart up on the screen. Now, you can use this even if you don't trade the ES Mini. What you can do, folks, is if you are trading the doubles or the triples in the S&P 500, you may get better signals by taking a look at what's going on inside the futures contract, just simply because it's just more information that is out here. And when we take a look at the futures contract, there's 2 AB equals CD patterns that it created. It wasn't while I was on the phone either with Phil or one of the guys. It completed a long-term A to B equals C to D at 10:20 this morning when it got down to 1317.50. The actual, I'm sorry, that's not the right price. When it got down to 1312.50, the actual A to B equals C to D price projection was 13.50. You got to love that. To be off by a point, that's $50, folks. So there's your A to B. Your A point out here starts out at 4 a.m. on May the 15th. Your B point is down here at about 3:30 in the morning on May the 16th. Does a normal retracement. Looks like about a 0.618 retracement at 10:30 on May the 16th. Completes the A to B, 1-to-1, A to B equals C to D, and it does it with a hammer candle. You get confirmation on the next candle. That says that what we should see is a bounce here. At least it's good enough for a trade. Where's the other A to B equals C to D pattern? Hey, I'm glad you asked me that. Well, that is within the C to D swing point that we can take a look at. In fact, you can take a look at right here, A to B. Let's see if this completed. No, that one didn't complete yet. The larger one, though, does take priority. You had another one, though, inside this leg. Let's take a quick peek at it. Your A-point out here at about 2:20 in the morning on, what's that date? 5/17. That was this morning. B-point come in at 4:30. Market moves up, and you do a 1 to 2.618. A to B equals C to D. That is also a beautiful thing. That's where, as we were talking with taking a look at the bond funds and taking a look at how they have made a 1 to 2.618. A to B equals C to D, almost an immediate turn. When you get past there, you go to pi. So right now you've got a confirmation that this market does want to get a little bit of a bounce in. And right now you're trading off $35. Let's see what else we've got going on here in the market. Let's go back and take a look at gold, because we do have gold trading up right now, $35. So gold is on the move. You've got some good volume today. Right now you've done 146,000 contracts. Yesterday you did 159,000 contracts. Let's go take a look at silver, high-ho silver, see what silver is also making a similar move here. Silver is up above the December 29th price point of $27.84. It is setting up a bullish engulfing today, and you want to see it clear that December 29th swing point. Real confirmation doesn't come till tomorrow, mañana. Let's go take a look at light sweet crude, see what light sweet crude is doing. Light sweet crude going back and taking a test of the December 15th, December 16th swing point. The low there was 92.52, trading out right now at 93.03. That area had about 273,000 contracts yesterday. You went into it with 284, so a similar number of contracts. Oil not giving us any clean indications as gold and silver has been. Let's go take a look at the ETFs out there. Let's look at those 10-minute hammers that were out there to see what we have. Each of those 10-minute hammer candles giving us a confirmation that they also want to seek out higher price. Let's see here. Well, the show is up. I can't do any ABCD patterns in about 3 seconds' time. Folks, it was great to be here with you today. I won't be around tomorrow. I'll be doing an online live workshop. You can still get access to it. If you'd like, go to the homepage of tfnn.com. I will absolutely teach you how to master buying and selling the D point. That's something that you want to be able to do, folks. Have a great day. Enjoy your weekend. I look forward to seeing you Monday morning, 9 o'clock. Take care, folks.
Put the power of the Chapman Wave methodology to work.